All right, so starting off here with the S&P 500 for Wednesday, October 9th, 2024. What we have right now is a short setup for the S&P 500 minis for it. And what we're looking at, we have, see this is A, B, C, and then the D's all the way up there for just ABC trades. Then what we do is we put the shift pitchfork on points points 2, 3, and 4. Let's make sure that's the high. What is that? That is 5840, 5840. So right there, that's going to be it right there. So when the price, you can see it came out and hit the line, never quite got it. Even though it made another high, we just leave it at D because the D at that orange semaphore, because this is the next 4 in a row. 1, 2, 3, 4. So there we go. So what we're looking for is, which happened right here, price closed below the blue bar that signals it's time to get in. The original exit is all the way down here at the white line, but that rarely ever gets hit because normally what happens is the price comes back up, hits the 23.6, which starts the plethora of entries and exit for it. So when it's 23.6, the exit is the 1.146. We'll just draw that green box right there. Top of that to be the exit right there. So yeah, that's how that works for it. And then we have a couple other different levels that goes up there and get hit. If it's at 50, then the exit moves down to the low of the close low. If it's the 1.146, then the exit moves to the 23.6 line, and that's where we leave it from there. So that's what we have. We also have another pretty decent looking setup, but we obviously need some move down in the market. Is using the Andrews pitchfork on the kind of expanding triangle trade right here. Right there, 1, 2, lower, low 3, high, high 4 right there. So we put the Andrews pitchfork on points 1, 2, and 3. So if price ever comes down and closes below this green line right here, we'll look to go short and more than likely put the Fibonacci retracement levels on, looking for a pullback to there to take a short trade. So as of right now, we do have a live setup currently. We'll see if we can get filled here in the next 20 minutes for the market closes. If not, then we'll look to get in the overnight session right there, at least put our entries in for it. And then tomorrow, if we can get a big down day, tomorrow or Friday, we'll look to go short down over here. Here in the Russell 2000, here what we have right now is we have a really nice setup for it. Just saw this one a second ago, and let me move some of the stuff off so it's a little bit easier to see for it. So what we're using is we're using the inside pitchfork, and here you have points 1, here you have points 2, and then you see point 3 right there and point 4 right there. Well, point 3 and 4 have to be within points 1 and 2, which they are. So then we stick the inside pitchforks on points 1, 2, and 3. You can see the little dots that we have right there, 1, 2, and 3. So then whichever way price closes, whether it closes above it or below it, that's where we're going to go. So it closed above it, so we're looking for to go long with the original exit all the way, where is it? Where's that exit? All the way up here. And that's obviously not going to go up there and get hit because price has already come back in it to the retracements. So we'll go ahead and put the Fibonacci retracement tool back on. So after price breaks out, that's what we're looking for. So price came down to the 23.6. So that originally would move it up here to the 1.146 exit, but then when price hits the 50% right there, then that moves the exit down to the previous close of the high, which is that bar right there. As you see, my exit is lower than it because this one is a little bit subjective, so I always make sure I'm definitely lower than the hard exit for that one. And then if price hits around the 88.6, it didn't change anything, just gets me in again, and then price goes all the way down here and hits the 1.146. I have 2 micro contracts down there. That will move the exit to the 23.6. And I think, yeah, I have one more at the 1.414 just for good measure as well for it. So that is what we're looking at right now for the Russell 2000 going into tomorrow. We do have a good long setup. You know, I wouldn't mind if price goes down, collects all these, and then shoots back up. That'd make a really nice trade right there. So, yep, that's what we're looking for in the Russells. Going into the Dow Jones, we have another inside pitchfork trade right here. So you can see right here, we're using these 4. There's 1, 2, and then here's 3 and 4 within points 1 and 2. So we put the inside pitchfork on them, see which way it's going to break out. Broke down here to the bottom. So we put this Fibonacci retracement on there. And price does not come up and hit the 23.6 until right there. But as you can see, let's, do I need this on? Well, I need to move it. So it hit the 23.6, so the exit was the 1.146. Hit the 50, and this is where the exit was earlier, down at the previous low. But now that price has gone all the way up here and hit the 1.146 up here, now the exit moves to the 23.6 level. So the top of the green box right there is going to be the exit. There's my 4 micro contracts right there for that exit, and then price does go up a little bit higher and hits the 1.44. I have another contract just for good measure to get in for it. So that's, yeah, it's a good short setup that we're looking forward. Come back in gating complete tomorrow here for the Dow Jones. So at least for tomorrow initially, or maybe in the overnight session. Hopefully get a down move, and then after that we'll just have to see what's going to happen. Oil, now I put a lot of notes on here because this is something new that I'm looking at doing, and the second best way to learn something is from your mistakes. The first best way to learn something is from someone else's mistakes, but since no one else I know is trading this way, I'm just going to have to learn from my mistakes if it is a mistake. And this might not even be a mistake, it's just something I have to try out, because if it does work, it's going to increase my profitability a lot. So what, oh, I didn't mean to hit that. What we have is, trying the new high rule in this trade, and I just put that up there to remind myself about it. And so what I'm looking at here is, okay, well, hold on real quick. So tomorrow, which probably won't happen, if price goes 1, 2, higher high 3, lower low 4, say put the Andrews pitchfork on points 1, 2, and 3. If price closes above it, with the green line, and then the exit would be way up here at the yellow line, but more than likely we put the fibs on. So I'm just keep that on there just in case for some reason there's a big run up tomorrow or Friday. We can get in right there, but if not, no big deal. And so what I'm doing is, so what we had right here was another pitchfork trade. So you see 0 or 1, 2, higher high 3, lower low 4, all the way down here using these 5 semaphores. So when the price closed above it, which was above the green line right there on that bar, that signaled to go long. Now, normally what I was doing is, if like this move right here did not break this bar, and I'll put a line on it, you see it was just basically a double top. Then what I was doing, even though it closed above the green line previously, since price had come down here from the move, from the retracement move, and hit the 50, I was counting that as already a done move. And since price is already here at the, or actually north of the previous close high, the move would have been over. But what I'm looking at seeing now is, instead of doing that, what we're going to do is we're going to treat it like we are waiting for a new high to break out, which it did right there on that candle. On that candle, very next one for it to create a new high. And so now all we're going to do is we're going to treat the retracement rules like they're currently on. So we have the 23.6. The original exit is, where am I, right here? Yeah, the original exit would be the yellow line all the way up here is where that would be, but more than likely, like almost every other time, it comes back and hits the Fibonacci retracement. So when it hits there, we'll do the regular Fibonacci rules for it. You can see I'll have all my contracts ready. I'll have to put them back on after the market opens back up at 5 o'clock, but it is what it is. And so this is why I'm seeing it, because there are a lot of trade setups that the new high is not made by the time price closes either above or below the line right there. And so what I'm seeing is, if that doesn't mean the move's complete, if we still need to push up to new high and then see if we're good retracement come back. So it may be a complete cluster failure and I lose a good chunk of money, but it is what it is. But I have to see if this is going to work. So if it does work, then it will be very, very beneficial to my trading. So that's what I'm looking at right now, and that's what I put this trying the new trade rule in that trade right there. If the price closes, initiates a trade but isn't a new high, then you can go with the fib level it has already touched, which I used to do, or do you wait for a new high to start the fib retracement lookout, which is what I'm trying now. So we'll see what happens. Yeah, going down here in the Nasdaq, we have a really big long setup for the Nasdaq using the ABCD trade, because you can see right here there's the A, B, C, D. So then we put the shift pitchfork on 2, 3, 4, BCD, BCD right there. And so since the red ones were already confirmed and we got a red one confirming over here, we're not going to draw this up any higher. This is a done move. But price continued to go up, closed above it right here, And so that means now we have a long with the exit as of right now all the way up here in this white line up there. Let me get the arrow instead. It's going to be way up there since we had the close outside of the blue line right there. That's where it's going to be. But more than likely what's going to happen, price is going to pull back to 23.6, which is going to be that level right there, assuming that high holds and the exit moves to the 1.146. So that's what I'm waiting for. Tomorrow morning, in fact, I'm not going to put anything on overnight for this. I'm just, tomorrow morning when I wake up, what I'm hoping to happen is there's been like a move down like that, and I can get in at an even better price down here when I wake up for something like that. So that's what I'm hoping for right there. You can see I had this on there thinking it's going to close to the downside, but it did not. So that's what we're waiting on for that one tomorrow. We do have another ABCD trade. So there's A, B, C. This is going to be the potential D, that high up there. Let's put this on here to remind myself about it. C, D. And then what we would do right here is put the shift pitchforks on points 2, 3, and 4. So we just keep on moving this higher if it keeps on making new highs until we get a red semaphore to form on the high end over here. Because if we get a retracement back down here and it closes below the blue line right there, then we'll get a red semaphore on there to confirm that area with the exit down here at the white line, and we'd look to short it for that one right there. So that's what I'm looking for, those two trades. There's potential short setup. Then it's already in a long setup right now, but I am waiting for a pullback for that one for it. So anyways, that is that. Take care and talk to you later. Bye.